we actually looking at? We're looking at two major currencies and trying to make a prediction or take a trade that is based on what these two currencies or countries are going to do relative to one another. That is the fundamentals, right? When we're actually talking about what's going on and why, what the ECB or the Japanese bank, what they are trying to do to stimulate their own economy, how well they're doing it, or how poorly they're doing it. That is really what we're trading. And so, for me, keeping the fundamentals in mind is very important because that's really what's driving the market up or down. It is not just trend lines and Fibonacci retracements. Although those things are helpful in my view, the most important thing is understanding also why underlyingly they are moving up or down. The scary thing is that when you double an account, you are taking very high risk. And we glorify that on social media. I don't, but a lot of people, they really much, when they look at forex and when they look at trading, it's all about flipping accounts and making it big and short-term gains. And the thing is, if you're doubling an account, the risk that you have to take to double an account long term, if you were to keep doing that, is almost certainly going to blow accounts, right? So when we are looking things with a realistic perspective, if you're doubling an account, you have to take a lot of risk, and the more risk you take, yes, if you can make a lot of reward, the only way to make a huge amount of reward is to do what? It's to take a huge amount of risk. And when this is in your favor, that's great. But what about when it goes against you and your huge risk does not pay off and in fact leaves you with giant losses? This is the sort of thinking, this is like the pessimistic view of trading that is almost important. It's like, well, what happens if I'm wrong? What happens if I lose? What happens if this thing goes against me, right? It almost pays in trading to be a skeptic and to be more on the conservative side. Just my thoughts. If you are a newer trader and you're trying to figure out, how much I can earn from trading forex, the problem is that is just like, it's a short-term view of a long-term skill, right? Learning to trade is not something that, I did it when I was 17 and I stopped when I was 19 after I made a couple $1,000. That's not the goal, at least for me and for a lot of probably other experienced traders. Is the goal with trading is to do it for life. It's a skill that you can use for a long time and you can take advantage of, right? You might say, I made 45 pounds or euros or dollars, whatever you're trading in, right? But what's more important is, hey, I'm learning a skill that when I get older, when I have a job that pays me a salary, I can take that money, use it in my trading account, and I can grow it. Too many people are looking short term. They say, I've got $1,000 in my account. I need to make $3,000 a month off this so I can do it full time. Not going to happen. Just, I'm sorry to be your dream killer, but you don't make big money off of small money in the markets. And I know $1,000 is a lot of money to a lot of people, but in the U.S., right? In the U.S., the average salary is what, like $50,000 a year, $50,000 a year. If you were diligent and you put away, I don't know, a third of that, right? If you were very, very conservative, you put away a third of it. Over time, that money becomes more and more meaningful, and you have the same skills, right, that you had when you only made 45, but someday you might make 4,500 in a year. You might make eventually 15,000 in a year, and eventually maybe you make $50,000 in a single year because you've been diligent to build your accounts and you're looking at the long term. Forget all this noise, forget all this stuff on Instagram and all this stuff on YouTube of these 19-year-old millionaire traders. They're not doing it from just trading. They're trying to sell you things, and that's how they're making big money, right? Or at least they're claiming to. The reality of trading is that just trading, it takes a long time to really build an account. It's not something that you do in a single year. I am the bearer of bad news when it comes to this stuff, because on my channel I don't bullshit you guys. I don't make it up, right? I don't like make it into something it's not. Trading is hard, and it's a slow process to making a lot of money. News, if you don't look at what's really going on in the world, it can really, in my opinion, is kind of missing the full picture, right? Because when we are trading currencies, we're talking about the supply and demand of different currencies available in different countries, and looking at their numbers and their statistics and stuff is important. And this stuff, if you're a day trader, guys, this is the stuff you got to be aware of, because if you're day trading the US dollar and you're day trading something, and then all of a sudden non-farm employment, change comes out and it's a big mover, it could drastically push positions against you or in your favor, but that's more of a gamble if you don't have any sort of knowledge that it's coming, right? So it's important to at least keep an eye on the news, even if you don't trade using fundamentals, just to know when news may strike next, if you will. So just some outlook for you guys here as we get into the stream. I did more money into my trading account, and whenever I do that, it is a very big reminder you have to stick to the plan, because when you start putting money in your trading account that is a little bit more serious, right? Serious amounts, then what ends up happening is you get kind of reminded that it's like, hey, this is not messing around. This is a real business, and it's not for fun. Although I enjoy trading and I enjoy doing research and studying this stuff, you put real money on the game. It's not. It's nothing to mess around with. Making stupid mistakes are not even a question, right? When you're a new trader and you're just kind of gambling your $100 or your $200 or whatever, it's really easy to just mess up and not take it seriously. But if you want to ever be successful at this stuff, it has to feel like work. It has to feel like a business. Although you can enjoy. Like I run a business right now, right? My business that you guys see here, I create content. I have this YouTube channel, obviously. We write articles, we work with brokerages. That business, I enjoy doing it. I really love creating content and working with my team and stuff. But it's a job, right? It's still work. I'm sitting here coming into the office, getting dressed up, getting ready, and preparing for these streams and stuff like that. So it's one of those things. When you trade, when you're serious about your trading, it's got to feel like work. It can't just feel like, oh yeah, the Aussie Swiss is going to the moon, bet, I'm throwing all my money on it. It's going to end really poorly, right? Hi, Nick from the Philippines. Can you be an investor and a trader at the same time? Yes, you absolutely can, G. I am a trader and investor. The thing is, trading is great, but I would be pulling my hair out if my only source of income was from trading. Because trading, inherently, you're swinging your money a little bit more to try and make a little bit more, right? That's the idea in theory. I don't trade with every cent that I have in my trading account. Now, it's a portion of my money, but with any good sort of investing portfolio, and I'm not an expert here, but from what I know, I would say that balancing things properly is a healthier way to look at it, right? So I have money in Bitcoin, I have money in gold, I have money in long-term stocks and in long-term ETFs, and in my forex trading account and in my stock trading account, and eventually when I buy a house, it'll be in real estate, right? So I'm trying to diversify that money so that if trading goes well one month, then that's great. But what about the months where it doesn't go well? I'm not going to feel like I need to go drop everything and get a job, right? The idea, and I also, of course, have my business, so there's different sources of income, and I would say that probably for anybody who's like realistically trying to make trading a part of their income is to accept that, okay, it's okay to have multiple sources of income. You don't need to be a full-time trader right away. That's like the idea. Maybe one day, just trading will be something that I could just easily do with super low stress. But for me, just trading, it's almost worse for my trading performance to have all of my focus just on trading, because then I'm way too focused on it. But if I have lots of things going on, I stick to my plans and I continue to, diversify, it's a little bit healthier for me. Your monthly goal in less than a month, do you continue trading or do you just stop until the next month? Bogus, great question. So generally, if I have a good month, I continue to trade. But if I'm feeling, Will and I call it feeling invincible. If you feel invincible, then what ends up happening is, you think you can't take a loss, and then eventually you do. So generally speaking, if I take a lot of wins and I'm having a great month, I might just do what I say, like calm down or cool down for the rest of the month, where I will still take trades, but perhaps I'll take half a position size or just go slow with it, right? I'm not going to try and fight that greed or that invincible feeling, if that makes sense. Okay? Nick, have you ever tried scalping? I'm a big not fan of scalping. I don't. I suppose that some people like to scalp and some people have done it, but I haven't really met any traders that like they've got some sort of track record and they really love to scalp and they're constantly scalping the markets and doing well with it. Because I feel like the spread for scalpers is such a big obstacle to overcome. If you're going for 10 pips, but it costs you 2 pips to get into the trade, that's expensive, right? Your spread that your broker offers, if that gets you in, you know how when you take a trade, it's immediately negative? That's because you're paying the spread, right? If you get in and the spread is 2 pips and you're going for 10, suddenly, you're at a disadvantage. You have to get 12 pips in your favor actually to get 10. So, whereas with a swing trade, if you pay 2 pips in spread, but you're going for 100 pips, it's not such a big deal, right? It's just a small little fee to pay compared to the overall move that you're going for. So your commissions and your costs go up drastically when you're scalping. Now, when you're swing trading, you have swaps, but swaps can be positive or they can be negative, right? Swaps can pay you for holding a position overnight, and they can also cost you. A great example is back when the U.S. dollar Japanese yen was paying, U.S. was paying like 2%, and the Japanese yen was paying negative or 0%, let's say. You would get paid to hold the dollar yen overnight. If you don't know what I'm talking about, look up Trader Nick Carry Trade on YouTube. Carry, Carry, Carry Trade, Trader Nick on YouTube, and you can see what I'm talking about with the positive swaps and gaining money for holding stuff overnight. Does that make sense?